From Barangaroo Studios, the Ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, this is the COB, all the stuff you need to know about day in business and markets. I'm Danielle Akuye. Okay, now let's check in and see how the local market has closed. And I'm just looking at the ASX 200 and it looks like it's pretty much flat on the day, up 2.4 points at 6,775. So all that lovely momentum that we saw this morning as a result of the strong performance, particularly out of the Dow, which was up over 500 points, did not translate here. And here is the CBO 200, not too dissimilar from the ASX 200, up 0.18 of a point. And really, it was some Chinese manufacturing PMI data that really spoiled the party today. But let's have a look at the three themes and see what we have been talking about. And it is a bit of a month-end fizzler. Pretty much, I think when I was last looking, we are down about 3% for the month. And we're also, let's just have a quick check-in. So for the month, the ASX 200 is off about 3.4%. And dare I say, if we look at the 6 months, it's off 6.77%. So a little bit disappointing for this Halloween evening. Now, is there a luxury boom going on? Treasury Wines, we've been discussing a lot today, that major US acquisition over $1 billion Australian dollars, as Treasury Wines have bought a Californian wine manufacturer, pretty much in the premium brand, between the $20 to $40 a bottle, basically segment of the market, and they're looking to raise around $825 million in equities through an issue to existing institutional shareholders. And of course, we can't get away from central banks this week, and the big meeting, the two-day meeting, is coming up with the FOMC. And of course, we will be hearing from Jerome Powell on Wednesday evening our time. Okay, now let's have a look at a few of the sectors and let's see how the miners traded today. Well, basically, we've got BHP and Rio Tinto in the red, probably taking that weakness that we saw in the Chinese data. Let's have a look at the banks, whether they could put on a slightly better performance. Now, interestingly, the banks were firmer overnight in the US, and with the exception of Commonwealth Bank, that has sort of marginally come into the Australian market, just bearing in mind that Macquarie Group was at a 52-week low yesterday. Consumer staples, now broker upgrading Endeavour Group, so we are seeing some buying there, up over 1.3%, and also Woolworths. But do bear in mind, we have had Endeavour's AGM today, we had a trading update yesterday, but a lot of those stocks had been quite weak in the run up to today. And the REITs also might be responding to those slightly lower Treasury yields that we saw overnight, because with the exception of Mirvac, Stockland, GPT and Charter Hall all in the green. Now let's have a look at some of those top corporate stories. So Treasury Wines, touched on that. That is currently in a trading halt until the November the 3rd in the morning. Inghams came out with a cracking trading update, and the market pretty much rejoicing on the back of that one. The stock up by over 8%. Looking at Resolute Mining, now they have had a bit of an earnings downgrade there. I think they've got some production issues, which has caused that share price to come under pressure. And Origin Energy, a major shareholder, AustralianSuper, saying they do not want to accept the current bid. So there are some of the stocks that we have been watching today. And the stock of the day was, I am being told it was Treasury Wine Estates, not ResMed. So my mistake earlier on when I was doing the programming. And Koshi was joined by Mark Gardner and Francesco Destratus.
cap raise in the market and you're shut for a week and the market gets hit in that in that period, it's never really a great reopening.
Okay.
Even the likes of CSL, when it did the 272, it did dip back below before it pushed back up. So it'll be EPS accredited first year. But this tariff review's 5 months away. So I would be, look, if you've got it, you believe in the business, and you're a long-term holder, you'd be definitely holding on to it, maybe taking up some of the cap raise.
Okay.
If you're fresh money, I think you can probably
Just
afford. You can afford to wait at the moment, I think, and go from there. So it's because I would imagine this acquisition's on confidence that those tariffs will be reduced and that market gets opened back up again. So
the market cap of Treasury Wine's about 8.6, 8.7.
Yep.
It's quite a large acquisition, so they've got to get it right. They're suggesting that there's EPS earnings accretion in the first year pre-synergies. So with synergies, that's got to add into that a bit. And look, it trades on 23, 24 times. Don't see a great deal of growth in those EPS numbers.
Yeah.
Look, I'd be a hold. If I own it, I'd hold, and I'd probably participate in the cap raising.
So both of our guests today on the call suggesting that you can, if you're an institution, take up your entitlement to the offer. Okay, now we are going to move to our guest who has come into the studio after a flight down from Hong Kong, and Martin Crabb from Shaw & Partners joins me now. Martin, thank you so much for coming in.
Great to be here, Danny.
So tell us, first of all, before we get to all the points, how is the mood in Hong Kong?
Yeah, pretty buoyant actually. I mean, I haven't been to Hong Kong since pre-COVID, and it's clear that there's a lot of construction going on. There's a lot of luxury brands. There's a lot of mainlanders who've come to Hong Kong to load up on all the Gucci's and the Ferragamos and all those brands. I've never seen anything like it.
A bit of a feeding frenzy?
Unbelievable, yeah. So just, busloads of people getting out and buying luxury brands and then hopping back on again. So that part of the market. So one of the people I spoke to when I was there, I was in an audience of people listening to the CEO of Swire Properties, and they're just saying that all their luxury stuff's up 40% on last year, and obviously that's the reopening of the Chinese consumer, but yeah, real red hot demand for brands, and obviously all the big European companies all there. I think I would have seen probably 10 or 15 Tiffany's and 10 or 15 Gucci's, and
it's a whole different scale,
yeah,
isn't it?
it's not just one or two of them. There's like 20 of them,
wow.
And you jump from Kowloon to Hong Kong Island, and there's another bunch of beauty shops down there as well. So it's pretty amazing.
And it's interesting because that really doesn't necessarily tally, which we'll get to in a second, is some of that China data. But before we get there, I love what you wrote. The data is just too hot. So last week, this CPI reading that we had here, too hot for the RBA?
And it's not just inflation, Danny, it's credit. So today was credit, so private credit's running too hot. Both housing and business credit. I mean, it's slowing on an annualised basis, but it just seems to be hovering around that sort of 0.6 to 0.8 level, which if you start annualising that, it's going to tick back up. And obviously we had retail sales earlier in the week, which also surprised the upside. So you kind of go, inflation's a little bit higher than the RBA would like it, and then the things leading to that inflation being credit growth and retail spending are also holding up. So it does look pretty obvious now that Cupdo is going to see a rate hike, and I think the futures are still 50-50. I think the chart is so we're at 4.1 at the moment. I think the November futures about 4.2, suggesting there's a 10 out of 25, or 1 in 3, 1 in 4. So you can just see the NOV futures there, 4.2. So that's saying there's as I said, 10 out of 20. If you go out to the middle of next year, you're looking at not just one hike but two. So most commentators we speak to have kind of abandoned the they're on hold because the data's too strong. And obviously Michelle Bullock's, her jawboning, or her language, I should say, not her jawboning, her language has been, look, we're committed in the fight to inflation. So it's got some really interesting implications, not just for those of us that have a mortgage that may be rolling off or has already rolled off, we're going to have to pay higher rates next year, that's for sure. So that's just going to keep things difficult. But also just in terms of currency, there's been a lot happening in currency markets today with the Bank of Japan coming out, and then this interest rate differential between what the US Federal Reserve, they're probably going to be on hold, so they might stay 5.5. We're going 4.5, so it's really starting to narrow. So we might see a bit of weakness in the USD.
So there's a lot there that we can quickly unpack.
Yeah.
I know we've got a federal funds futures chart. We might just pick that one up because that's really important in terms, again, of, you know, they're getting Treasury yields potentially doing a lot of the heavy lifting now for them. So do you see the Fed, what's this chart basically telling us?
Well, it's basically saying the interest rate expectations have not moved at all in the past month.
Yeah.
So there's been lots of discussion, there's been lots of data, there's been CPI, there's been GDP, there's been a whole bunch of data, a whole bunch of Fed speakers, and the market has not budged at all. So those three lines are very closely bunched together, and they're all saying maybe one more hike, but probably not. We are done. There's a small probability that the Fed may go again next year, but it's probably not going to happen. But there's no cut. So I think the right-hand side of that says we're at about, you know, just under 5 this time next year. So maybe one or two cuts in the second half of next year. But you know, it's interesting that the curve in Australia has moved dramatically. It's moved up by 1.5 hikes, but the US hasn't. So we should see the currency starting to pick up.
And we do have a chart for that for the interest rate differentials, which I think we'll try and get that up. So really all that staying on hold, that pause, the RBA obviously under Lowe was hoping to see the transfer mechanisms work. Maybe it hasn't been. So we're basically suggesting, or you're suggesting, that we have a catch-up potentially with the RBA, which might be reflected in the Aussie dollar.
All that chart looks at there, Danny, is the difference between Aussie cash rates and US cash rates, and we've projected it using the futures market off to the right there. So you can see that the differential starts to really narrow, almost back to parity. So we probably should see Aussie rates and US rates coming together, and typically when that's happening, the Aussie dollar's going up. I mean, if we can remember back to the 2012 when we were above parity, where our rates were 5% away from US rates. So of course, lots of money was coming to the Aussie dollar if our rates were 5% above theirs. Ours are currently 1% below. But as we narrow, I mean, those it's not a perfect correlation, as you can see, but they do tend to move together, generally speaking. So that suggests that as the interest rate differential narrows and our rates go back to theirs, then the Aussie dollar goes up, maybe back towards 75 cents. That's kind of what that chart's saying. There's lots of other moving parts, as we know. There's geopolitical issues, there's the government lockdown, there's the size of the deficits of the two countries, there's iron ore, there's China, there's a whole bunch of other stuff, right?
Let's touch on the China PMI, because I'm actually, I don't know if it was the sole reason, but it certainly had an impact on the Aussie market and also the Aussie dollar. We might touch on that because the Bank of Japan has also made an announcement today, but the Aussie dollar is currently off by 0.5%. 0.5%, I should say. So if we get that China PMI data up, Martin, it looked like weaker than expected.
Yeah, so it's dipped down below 50. So there's two PMIs out of China. There's the official government one, which was released today. There's then the Caixin one, which is what JP Morgan and other investment banks who compile these, or Standard & Poor's now, who compile these global indices, they tend to use that one. So we'll get that one tomorrow. That's a broader measure and it's got more small companies. So the official one came out today below 50, but I've just pulled out some of the components, which are new orders in the black line, which dipped down, but more importantly for me is the backlog of orders. That's dipped down almost to where they were during lockdown. So we've obviously had a huge backlog of orders as they came out of lockdown. That seems to have cleared now, and that's got really important implications for prices. So any inflationary pressure that's coming out of China has gone. They've cleared the backlog, and you'll start to see import prices start to fall in China.
So will they be exporting a bit of disinflation?
Yes, I think they'll go back. I mean, they've historically done that, like for 20 odd years. They'll go back to doing that, I think.
Okay.
Yeah.
And a question on the Bank of Japan. Got no idea really what goes on here. Yield curve control. They're still talking around 1%. What does it basically mean for currency and also US Treasury markets?
They're moving back towards letting the market set the interest rate. So they're the lone ranger in terms of a central bank with a yield curve control policy. Like everyone else has abandoned theirs, but the Japanese have hung on to it. And obviously with the change of governor, there's an opportunity for them to change their language. So they've changed their language in a very, very subtle way. They're now saying that 1% 10 years is a reference rate. It's not a cap. So the market's going to test 1% on 10-year JGBs. And it started doing that after the announcement and is bouncing around a bit. But the other thing is that the yen is, 150 to the US dollar. So we haven't seen that before as well. So a lot of volatility in the rates market and the FX markets. And I think what you'll see is that long-term Japanese government bond yields will start to drift higher, and the Bank of Japan will sit back and let it happen. They may intervene if it moves too quickly, but they're kind of backing away from yield curve control, which they need to. Their own inflation forecast just got revised up to 2.8 from 2.3. So they're seeing inflation. Why do they want to keep rates low if they're seeing inflation? They should let rates adjust upwards.
So much happening at the moment, and we will possibly ask you next week whether or not we're going to get that Santa rally, because at the moment it looks like Santa's possibly going on strike.
Santa's on strike along with a lot of workers around the world.
Indeed. Martin Crabb, thank you so much for joining us today.
Always a pleasure, Danny.
Okay, now let's just check in with some of the leaders in today's trade and see how they were going. Okay, Inghams Chicken, we've already updated that one in terms of the trading update. Life 360, I understand, has offered a new platform to their UK market. Johns Lyng also doing well, up 4%, Super Retail. And look at that, Qantas, finally some buying coming in there. And let's have a look at the laggards and the top stocks and see what was happening in that space. And hopefully they will be coming up at some stage. There we go. Sayona Mining and Syrah Resources off by around 8%. And Lake Resources, haven't seen that one for a while, off by 4.5%. And Allchem as well as Pilbara Minerals. Really interesting. So much weakness there in the lithium stocks, which is probably not surprising given the Panasonic results that we saw out last night, which basically shows that demand for lithium ion batteries is falling, and that would suggest that electric vehicle sales are also under pressure. So Tesla was off about 5% is my understanding overnight. Now, what's happening in the small caps? And let's check in with some of the leaders there. Encounter Resources and Calidus Resources up by about 15%, and Cyclopharm up by 14%, Cocal up 10%, and Creo Scorbital, we don't even know what that does, forget that. Base Resources off by 14, Terracom 11, Carnaby Resources off 9, and Ioneer off 8. Okay, let's now have a check-in and see what is happening overnight, and hopefully we will have an update. But I do know we've got US Employment Cost Index, US home prices and US consumer confidence, as well as more US earnings. And of course it is the start of the two-day FOMC meeting. And what else is happening in terms of tomorrow? So September building approvals, house prices for October, and also looking further ahead is that US Fed policy meeting and jobs openings. Well, that of course will be important. New Zealand unemployment for Q3 and a more global manufacturing PMIs for October. So a final recap of the market. CBO 200 slightly positive, up 0.18 of a point, and the ASX 200 squeaked out almost an 8-point increase, or 0.12%. And just quickly giving you a reading on the Aussie dollar, because it has been weaker today, currently trading around 63.5 cents. And a quick look at the Futures markets in the US, and at the moment we do have negative futures in the US, but hey, a lot can happen between now and when the US opens. Well, thank you for joining us today on the COB, and of course, have a great, happy Halloween. And for those of you out trick-or-treating, don't have too much fun, but we of course will be here at 9:30 bright and early in the morning.